Welcome to another episode of Crypto Corner, everyone, your crypto radar for all of the latest news, reviews, market analysis and tutorials that help you master the cryptocurrency markets. Today, we are going to talk about Bitcoin and a little bit about Ethereum, but mainly Bitcoin and the market manipulation that is currently going on. This correction that we are seeing is, in fact, no doubt about it, a market manipulation. And I will be referencing a video from someone that I just watched, something that I haven't done in I don't know how many months. I mean, it's been ages since I actually had the time to watch someone else's video, but this was actually thrown in a few groups that I'm on in Telegram, and many people were discussing this, and I decided to take a look, and it actually makes perfect sense to me. So this is why I'm going to draw your attention to that. And we are going to do a quick market roundup as usual. This is how we start in this video podcast. So let's get started first with the market roundup. Okay, and as we can see today, unfortunately, a hugely red day in crypto. I mean, something that we haven't seen in quite some time. In the last few days, we had red days, but today is by far the worst of all of them. Bitcoin is down by almost 14%, Ethereum more than 20%, Binance, BNB 24%, almost 25% down since yesterday. XRP 21%, Cardano 23%, Dogecoin 24%, across the board 20. I mean, polkadot is one of the least affected, 11%. Not that this is not a lot, but it's not 20. Litecoin 21% down, Bitcoin Cash 25% down, Uniswap 25% down, Chainlink 18% down, Stellar 23% down, Solana 20% down, even though Solana actually in the last few days was pumping really hard. And hopefully you took advantage of the pumps, because as we see a correction in Bitcoin and a huge drop in Bitcoin, sooner or later it will catch on with everything else. And today is that day. So yesterday we had Solana, we had Syntexis, we had Kusama and a few other coins, Matic pumping hard. Matic is actually still doing well. It's 77% up in the last 7 days, and it's 14% up in Bitcoin value today, 0.73% up in fiat value. But I feel that it's getting exhausted at this point. It's reached the peak, and I feel that it's going to go down. So if you're holding Matic, I don't know, maybe take some profits. Aave was also up in the first days of the correction, but it's 12% down today. So everything is absolutely smashed. And this is because of Bitcoin dropping so much. I told you, even though we're in an out season, when Bitcoin starts making these huge moves, inevitably it will catch on with the rest of the market. I mean, when Bitcoin is dropping significantly, that means that the confidence in the investors and the traders is diminished in Bitcoin, and they're exiting. So they're either exiting in altcoins or they're exiting in fiat or stable coins. And in this case, the exit is in stable coins and fiat. It's no longer in altcoins, because with this huge drop, the whole crypto sentiment is negative right now. The bears are in full control, and the bears are huge whales with huge accounts that are doing heavy market manipulation right now. Why am I saying this? Well, first of all, let's look into this chart, which is my Bitcoin chart. I've been drawing this in the last few episodes where I was doing my analysis, so you've seen this already. But what I've added today is this red mark here. So basically what I'm analyzing is where is our support levels? How low can we go? Can we go lower than what is currently happening? And the answer is yes, we can, unfortunately. So first of all, when I ended my previous analysis, we were here. We were just about to touching this support level with 42,500. And it looked to me like this will be enough of a correction. However, it was still possible, and I told you I didn't expect it, but it was still possible that we can go to the lower support levels of 39,000, and we have another lower support at 35,000. Well, unfortunately, we dropped to that support level 39,000, and we are now breaking below it. As we speak, right now, we are going below this support level. This is not very good for Bitcoin. because now we are actually on the daily, we are actually going below the 200 daily moving average. Previously and typically in a bull market, the 200 daily moving average is acting as a strong support. Usually we bounce up from there. This is what we did as well. If we go in the 4-hour chart or in the 1 hour, we will see it more clear. But as we touched this support level, we actually went up, and we only went up to the previous support, which is now acting as a resistance. But unfortunately we got rejected from that resistance, and then we started dropping again. Now it's probably time now to stop blaming Elon Musk for manipulating the market or for causing this dump, because this is not a dump that happened because of Elon Musk. Now, did he help? Definitely, and I said that in my previous video. He was facilitating this dump. He helped the dump occur in faster move rather than what it would have done organically. But this was already going to happen because of this head and shoulders pattern that we are seeing. And not only that, but according to this guy here, the video that I watched today, and this, as I said, this is the first time I'm watching another YouTuber in a very long time. Mind you, this guy is not actually a crypto YouTuber. He only posted 2 videos, and he's talking about the Wyckoff principle. And this is something that I mean, it's not news. It's the Wyckoff method is something that was developed 90 or more years ago by this trader who was a broker as well, and he was observing how experienced traders are manipulating the market, and why are they successful, what do they do, and how do they do it. And he came up with these different phases of the market, and they're all explained here in this post. I will be dropping the link in the description so that you can go and read about it and do it in more detail, because it is actually quite a long post. It's doing a proper breakdown on the Wyckoff principle, and it gives you everything that you need to know about it and how it was developed and what are the different phases and everything. But I will just focus on what this guy was pointing out in his video, because it makes perfect sense to me, and I'm going to echo his video basically. I will also drop the link to his video if you want to watch it, because he's also explaining it in more detail. I'm going to try and just summarize it here, make it brief and easy, and then for greater detail, just go into the description below and look into the reference links that I have put in there. So basically, what we are seeing is a typical market manipulation. The markets, unfortunately, they don't just move on their own. The markets are being moved, as he said, and as also Wyckoff observed. And the markets are being moved by those with the large accounts, the whales, as we call them. In Bitcoin, these are people with tens of thousands of Bitcoin. Not 100, not 1,000. We're talking tens of thousands of Bitcoin. And there's a few accounts on Twitter, one of them I'm following, who are actually reporting all the time, every time there is a big movement of Bitcoin, in a wallet, like 10,000 Bitcoin being moved from an exchange to a hardware wallet, or from a hardware wallet to an exchange. That Twitter account would report on it, and I see that every day. I see someone moved 10,000 Bitcoin from this wallet to that wallet, someone else moved 12,000 Bitcoin, someone else moved so clearly there's a lot of people that still have these kind of huge amounts of Bitcoin, and these are the whales. These are the ones that we are dealing with here. These are the ones that are moving the market. And even though they are not necessarily organized, it doesn't have to be all of these people knowing each other and conspiring, to do this in a controlled way. They're still doing it in a somewhat controlled way, because we see that the markets are kind of, it could be that, 1 or 2 or 3, maybe even 5 of them are actually friends, and they're moving the markets together, but also their moves, their actions are being copied by others. And if you see that the market starts dumping and you have huge accounts and you start dumping at the same time, then you're causing even bigger dump, and then you're causing panic selling, and all of the retail investors, the small guys that jumped in the last few days or in the last few weeks, and they're seeing now that their investment starts losing, that they're starting making losses, they get scared and they start selling, and it's a lot of them. And this way it kind of catches up and it becomes even more accelerated. So the stages here in the Wyckoff principle. First you have accumulation stage, and you start making higher highs, higher lows, higher highs, higher lows, which is pointing towards a very bullish action. So that this price action brings a lot of new people into the cryptocurrency or the stock, whatever it is, because this principle is not for cryptocurrencies only. It is in fact developed for stocks and other commodities and other trading assets. So as people start seeing this price action, they jump in. As they jump in, we hit a top, and this top here is called buying climax. So at this point, when we reach the buying climax, we actually see a drop. We see a lot of supply coming into the market suddenly, kind of outpacing the demand. And with more supply than demand, of course, what happens is the price is going down. You don't have that many buyers, but you have so many sellers. Or it doesn't have to be many sellers, but big volumes of selling and not such big volumes in buying. Therefore, the price is being brought down. This is the automatic reaction, or he calls it, automatic reaction. So the automatic reaction to a increased supply is, of course, a price drop. After that, you see a testing of this previous resistance, previous top. And this is the stage, he calls it secondary test. So at this stage, you're actually going up to retest to see what is the buying power. Can we actually go up to the previous high? Or is there a weakness in the buyers? And as you find the weakness in the buyers, this is where you peak. It's usually below the previous high. And at that point, you start correcting again, going down all the way down to this point here, which he calls the show of weakness. So as you start going down, you actually see that there is, it doesn't even have to be that much supply. Just the demand this time is less than previously. And it could be for different factors, but one of the factors is the fact that we didn't reach the previous high. And as we got rejected from here, that already tells many people that the buyers are actually weaker, and experienced traders would be trading this, they will be shorting or selling, right? Because they know that there's not enough buyers. So now they're going to be making money from shorting, pushing the price lower. And this is the show of weakness. This is when you actually don't have enough buying strength, but you have a lot of selling strength. And then you go up again. You're reaching the UT, which is up thrust, meaning that this is a pump, basically. So you're having another pump in the price. But after that, all of a sudden, you get a lot of supply yet again. Suddenly, you get a lot of selling pressure, pushing the price down again, artificially, not organically. Because at this point, you're actually seeing a lot of euphoria. People are now starting to make profits again, even those who were buying up here and they were seeing losses. Maybe they were just holding or something. So now they're finally getting into a profit. At this point, you see a lot of selling pressure. Even buyers that have a small profit now are quite keen on selling because they want to lock in profits. And yet again, the price is dumping hard, heavily, going all the way down to these price levels here where you see the show of weakness. At this point, just as you were thinking that we have turned the trend and that we are no longer going up, we actually start going up. So all of these people who are shorting down here and opening short positions down here, all of a sudden they get liquidated, all of these short positions. And you're manipulating the market this way. And then you go higher and higher and higher, and you confuse, you make everyone think that we have started the next leg up, and everyone starts buying again. And maybe they start buying after confirmation, after we break out. So they start buying up here in these higher price levels rather than down here. And now all of a sudden we are reaching another up thrust here. And after that, immediately we're having another selling pressure wave, a huge supply that is pushing the price down again, and now liquidating all of these longs that were placed in here and liquidating all of the profits from people that were buying on the way up here. And then as that happens, they start selling, and we drop even higher, another push, artificial push of the price is bringing the price even lower. Panic selling is catching on, and then we start going down and down and down until we complete this cycle and we go pretty much all the way where we started from. So This is basically the principle, and unfortunately it is actually playing out in Bitcoin. But before I show you how it plays out here, let's just quickly see at my personal chart what we can see. So first of all, I have superimposed the difference from the top point of this head and shoulders pattern to the base of this head and shoulders pattern. I'm superimposing it from the point where we broke down from it, right? And this is going to give me a better idea how far low we can actually go during this correction. And it is coming all the way down to the 32,000 to 32,500 price level. Currently, we are at 36,000 price level. Wow, we went that low? No, we are at 37. No, we are at 38 right now, but we did go all the way down to 36,000. We did not touch this support level, which is, I've based this on a previous Fibonacci level. This support is at 35,500. We didn't touch it yet, but by the look of it, this is exactly where we are going. And I have no doubt that we will reach it, because right now I'm seeing so much selling pressure. I'm not seeing any buying pressure. Look at this. These are all red candles, and they're huge red candles. We have price going down and volume going up at the same time. This is very bearish, okay? I've already talked about confluence of price action. This is exactly what we are seeing. We are seeing a huge supply here, a huge pressure on the way down, pushing the price down. So many sellers. What happened all of a sudden that we have so much supply that people, all the buyers, are not able to accumulate this supply? This is not that we are mining Bitcoin any faster. It's not that we are all of a sudden mining more Bitcoin than we were mining it a week ago or 2 weeks ago. Or it's not that people were completely not interested in Bitcoin. No, it's not that either. It's just that for those people that are interested in Bitcoin and they want to buy Bitcoin, there are 3 times more sellers. That's what's happening. And this is because of the huge selling pressure that happened in the beginning here that pushed the price down to these price levels. As we started going sideways and we started finding a bit of confidence in the buyers, there was another supply shock. Another huge price action that was pushing the price down. You know, a lot of Bitcoin being dumped in, you know, huge quantities so that it can quickly bring the price down lower. As we started going sideways again, what happened? The same thing. So this is pure market manipulation. It is a great example here. It's exactly what's happening. And we started seeing that weeks ago, actually, with the first when we first started correcting here and we started going up and we saw this huge price drop that was really artificial. It was on a Sunday, if you remember, or Saturday. It was on a weekend. And I talked about the fact that on weekends it's much easier to manipulate the markets because you have half of the volume that is being traded during the week. You know, during the week we have more than $500 billion in trading volume during the week. We have around $200 or $300 billion, or 400 at the most, $1 billion trading volume on weekends. So that is half of what it is during the week. So it's much easier, and this is the trading volume in all of the markets. I mean, Bitcoin's trading volume alone is not 700 billion. So it's much easier, is what I'm saying, to manipulate markets on weekends. And this is usually why we are seeing this kind of big red candles happening over the weekend. This is in one day. This candle, okay, it's slightly more. No, let's go on the daily and find it here. This is it. This huge red candle, one candle on the 18th of April, that was a weekend. And this is one of the big candles that actually was the reason why the price went even lower after that, because this candle brought the price down from 65,000 all the way to 55,000. This price action here, and this developed Friday, Saturday, Sunday. So Fridays are also not very big volumes. You know, typically Wednesday, Thursday are bigger volumes than Fridays. So Friday, in 3 days, we managed to bring Bitcoin down by 10,000. And then many people got scared and they started selling again. And we brought down the price to 48,000 from 65,000. This is within a few days time. A week basically took us to bring, or slightly more than a week, to bring Bitcoin from 65 all the way down to 47, 48. So, and this was before Elon Musk tweeted. Elon Musk tweeted somewhere here. So this is really, that correction already began way before Elon Musk. And according to this guy in this video, who is talking about the Wyckoff principle and how it applies to the Bitcoin price move since the beginning of this year, since February basically, not since January, but definitely since February, then it would make even more sense to you. Now let me just switch the charts. So basically what I've done here is I have drawn a very rough composition of this Wyckoff principle just so that we can compare it. So what I've done is, this is how I've drawn it. I didn't really take into account these little price moves because, I mean, one of the things about his principle as well is the fact that the markets never move in an identical way to previous. So even though we see these patterns and different formations on the charts that are repeating, they never repeat in an identical way. There's always a slight deviation, a slight change, something that would actually confuse you and possibly make you think that this pattern is being cancelled. This is the whole point of the market. The market is against you. This is what you have to remember. The market is being moved. It's being moved by the whales, by the holders of huge accounts. Their goal is to actually trick you. And their goal is to actually fill in their pockets, not to make it easy for you. So even though we see these patterns, when we see them, they always deviate and there is always a slight change. This is also what's happening right now. So I have superimposed this pattern that I've drawn from here into the Wyckoff principle, which is here on this page. So I've singled out the pattern itself without all the candlesticks and everything. And if we superimpose it, this is the Wyckoff principle graph, and superimposing it actually shows us that we are following this really closely. As you can see, we have the first high here. Of course, there were other highs on the way and corrections, but we hit it here. Of course, it is not necessarily overlapping it, but if it would, that would be 100% the same, and it cannot be 100% the same, but it is close enough for me to believe that this makes perfect sense. Then we have the drop going to the showing of weakness, and then we have the next move up, the up thrust, and then we have yet another push down to going and test support levels. And then the next up thrust that is making a new all-time high even in Bitcoin, at least in Bitcoin's case that happened. And then we have a very accelerated price drop going to that down price level here, showing of weakness. This is exactly what happened. And then we should have had a small recovery and continuing going down, but in this case we went for a much higher recovery. This higher recovery is the deviation from the pattern, and this is makes perfect sense to me that we would deviate from the pattern, because if we would not be deviating, then many people will be seeing that this is what's happening. They will be seeing how this is playing out, and they will be confident in the next move. They will already know what is the next move. If you are manipulating the market, you don't want everyone else to know what is the next move. So you need to deviate, you need to do something different that will confuse people, that will catch them off guard. And this way, with pumping the price so high, many people thought, okay, this pattern has already played out. It's no longer, we are canceling it with this move. It's no longer relevant. So I will be maybe opening long positions. I'm going, we are breaking out here from previous resistance levels. We are breaking out on the upside. We are starting the recovery. It is time to get in. Just as people thought it is time to get in and they got in somewhere around here, we see another push for the price to go down, a significant one, and the price is going down, and it's going down all the way down here. So not far from the bottom of this pattern. We started here, so if we actually move this pattern up to coincide with where we began, we went up, 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 we went up here, and now that we are going down, we still have a little bit more room to go down, right? if this pattern is to play out perfectly. But I don't expect it to play out perfectly. But in any case, we do have more room to go down, as I showed you. So the one bad thing about this is the fact that we are going below the 200 daily moving average, and I told you that in a bull market usually this is our strongest support. If we look on the weekly, what we are seeing is that we have the 20, it should be 21 weekly moving average. That was our strongest support, and we've broken it. And then the next one is the 34 weekly moving average, but I don't have it open here, and I'm not going to be doing this right now to actually check. I'm pretty sure, because this is the 50 weekly moving average, I'm pretty sure that the 34 weekly, being in between the 20 and the 50, is coming somewhere where we are currently staying. So at these price levels where we are currently, I feel that we are finding bottom right now. As we speak, we are actually finding the bottom. And yes, I did say that we could go to 32 or 33,000. This is going to be the lowest bottom that we can do right now before canceling the bull run. But we are still not canceling the bull run, guys. Do not make a mistake. Even this price action here is not canceling the bull run. What we are doing right now is we are printing something like a 40% correction, which 43% as we speak, actually 43.9, almost 44% correction, which is a very rare occurrence. Very rarely actually we make a 40% correction, but we do it in a bull market, and we have done it. I'm pretty sure that if we go to 2017, we are going to find instances like this where we printed a 40% correction. I have no doubt in that. Like if we look at, I mean, let's take a look at some of these corrections. And I'm sorry, I've got too many things written here, but I have been using this chart to estimate previous all-time highs and how many days and things like that it was taking. So I don't really want to delete all of these and cancel them. But let's look at, okay, I actually have it here. So this here is a 40% correction. This happened in September 2017. Before that, we had a 38, so almost 40% correction again in June 2017. And before that, we had a correction of 33%. So as you can see, during the bull market in 2017, we had two corrections that were of the same magnitude as this one. I mean, slightly less, but almost the same. I mean, 40% is pretty much the same as 44. And we had one of 33, which was smaller, of course, but even with these two corrections of 40%, we still managed to go so much higher than that. Look, Bitcoin was here at 4,900, so that's almost 5,000, and it corrected all the way down to 2,900. You know, almost half price, 40%, that's what it means. Yet we went to 20,000 at the end of this bull run. So for those people who were worried at 5,000, that we dropped to 2,900 and maybe sold and everything and thought, okay, Bitcoin is finished, you know, this bull run is finished or something, they were in for a surprise, because we continued that bull run all the way to 19,600, not 20, but close. So yet again, what I'm saying is that even with this correction right now that is happening, we are not canceling the bull run. This is still just a correction. In a few months' time, we're going to look back at this correction and we're going to be laughing at it probably. If not laughing, at least we'll be like, oh, we were so scared. Why? It wasn't necessary. This is what I'm wanting to say to you. And also, now another thing that this same person pointed out in another video, he's only posted 2 videos, as I said. And in the second one, he was talking about Ethereum possibly entering that same Wyckoff pattern, but being in the beginning of that Wyckoff pattern. So if we go on the 4-hour, maybe it will be a little more clear. So, and this is a speculation on his part, and of course on my behalf as well, because we do not know that for a fact. We can just assume it. So it just looks like it's possible that right now we are starting to be doing this Wyckoff pattern here in Ethereum. We have printed already the first wave and the second wave, and now we are showing here, this is the show of weakness here as we go down. This is the show of weakness, But the thing is, Ethereum is actually going hand in hand with Bitcoin. So this drop in Ethereum right now is really triggered by Bitcoin. And manipulating the Bitcoin market is manipulating even the Ethereum market. Bear in mind, there are not that many whales in Ethereum as they are in Bitcoin. Because first of all, Ethereum came out much later. In the beginning, many people were not strong believers in Ethereum, and a lot of these old school Bitcoiners, they were Bitcoin maximalists, so they were literally just caring about Bitcoin, nothing else. And I mean, the biggest Ethereum wallet is Vitalik Buterin's wallet. I mean, one of his wallets is public. I don't know if he's got any other ones, but definitely not as many whales in Bitcoin, in Ethereum, as they are in Bitcoin. So it's slightly less manipulated, the Ethereum market. This is also why a lot of the time we're actually seeing that Ethereum is performing different to Bitcoin. But during major market moves, either up or down, Ethereum is following Bitcoin, and the whole crypto market is following Bitcoin during major market moves. And I'm talking, you know, a market move of 15% like today, or a market move of 10% or even 8% in Bitcoin is a big move. So these kind of moves are actually followed by all of the coins. And this is why I'm hoping that over the last couple of days, you are taking profits from those few coins that were still pumping. I shared with you the ones that were pumping. I told you that I'm actually selling them because, you know, it was too good of an opportunity to miss out on it. Because even though, you know, Bitcoin's dominance is weak and it's out season, you cannot expect the altcoins to be booming and to be mooning if Bitcoin is dropping by 16%. This is a huge correction for Bitcoin, and of course it's going to affect the rest of the market. And this is exactly what is happening here. Now, I don't really want to end this video on a very low note. So what I can suggest is, first of all, if you are thinking of selling right now, don't. I mean, I'm not giving you advice, but I would really suggest that you do not start thinking of selling at this point. You are late. You should have sold, you know, 2 days ago, 3 days ago, 4 days ago. At this point, it is too late to be selling. Why? Because we are at 37,000. Our bottom most likely is at 33,000. This is a change of 5,000 for Bitcoin. In percentage, it's maybe 2% or something. I mean, on top of my head, I don't even know. Maybe it's less than 2%, in fact. So, what is 2%? No, it could be 2 or 3%. It doesn't matter. It's not worth risking, because what could happen is, because the market, as I told you, is against you. It's trying to surprise you, to catch you off guard. If everyone is expecting right now, and I did see many people talking about Bitcoin going to 33K, most likely it will happen. But first of all, it could be really brief. It could be when you're sleeping and catch you off guard. And also, it could actually not go there. It could go to 33,800 or 34,200, 34,600. You don't really know where it's going to stop. You don't really know when the sellers are going to stop pushing the price down. And if they see too many buy orders opening at a certain price level, it is also likely that they will not push the price down to that buy level, so that they can still surprise you, and that you miss out on an opportunity to buy it at that price level. And then the next day you wake up and Bitcoin is already at 40K and you sold it at 37 because you thought you will buy it at 33. But you placed an order for 33 at 500 and it only reached 34, or it reached 33,900, and it never went down to your price. And now it's 40. What are you gonna do? You'll be buying it higher than you sold it. So is it worth the risk? You know, to catch a drop of 5,000, is it worth the risk is the question. So this is up to you. I'm going to leave you there. I personally would not be selling at this point. I've already sold some in the last few days, and today I'm accumulating. Even if we go lower, at this point, I don't really care. For me, this support level that we are currently at is good enough to be accumulating. And I'm accumulating Ethereum and Bitcoin right now because I expect that during the recovery that they will be doing well. And it could be, in the past at least, we've seen when Bitcoin recovers, some of the altcoins are lagging behind, so they're not recovering as fast as Bitcoin. Ethereum usually recovers the best way, but Ethereum is down 26% and Bitcoin is down 17%. Mind you, right now as we speak, Bitcoin BNB is down 30%. Really not good. So I feel that the recovery of Bitcoin is going to be faster, and the recovery of Ethereum could be faster than many of the altcoins. This is why right now I'm accumulating Bitcoin and Ethereum. Later, I will again trade that Bitcoin and Ethereum for some other altcoins that I feel would be pumping harder than these two. But for now, I want to first see what the recovery will look like. I want to see how much strength the buyers will be gaining over the next few days to the next few weeks, because this is really what this recovery is depending on right now. And also it's depending on whether the whales are deciding to push the price even lower. Clearly, the whole purpose of this market manipulation here was to push the price as low as possible so that the big accounts can accumulate. And I'm pretty sure in a day or two, we're going to see some articles that will be finding out how many big wallets managed to gain even more Bitcoin during this market manipulation. Because last time we saw a big drop in Bitcoin, there was an article a few days later where it was saying how 10 of the biggest Bitcoin wallets or something like that, these are wallets that have more than 10,000 Bitcoin, have been increasing their Bitcoins during the market drop. So as many of the retail investors and newbies were panic selling, it was the OGs, the big accounts, that were actually accumulating. This is exactly what's happening right now as well. So this is why I'm selling, have a strong hand, diamond hand, as it's known by now. Do not sell, and at least use this drop to accumulate. We haven't cancelled the bull run, and even if the bull run gets cancelled, we would still have another bounce up to go and retest resistance levels before we really start dropping. So at least you can sell on the way up, on the bounce. Do not sell on the way down. This is definitely not a winning strategy. This is everything from me for this video, guys. I know it's a little bit long one, but hopefully you managed to get a lot of value from this. And if you did, share it with someone else who would also benefit from watching it. Also show your support by leaving a like and a comment below. Everyone who is commenting here on this video is going to be qualified for my giveaway, and I will be doing a giveaway in August. This is my summer giveaway. Throughout the summer, you have to just leave as many comments as you can on my videos, on all of my videos, and the people who leave the most comments are going to be the winners of my giveaway. I have Ledger Nano S, and I just negotiated another sponsor that will be giving, one of the prizes will be wireless earbuds. Earphones, but I'm not going to announce anything until I actually secure all of the sponsors for the giveaway and I find out exactly which are going to be the prices. I will be announcing that very soon. In the meantime, you start commenting. Make sure that you leave as many comments as you can and as many likes as well. This will be appreciated. Also, don't forget to be a subscriber and hit the notification bell if you're watching this on YouTube, because otherwise YouTube unfortunately is gatekeeping a lot of this crypto content and you will not find out when I'm posting a new video. And you need to know about every video that I'm posting right now, even if not for any other reason, just for the giveaway, guys. But I am actually bringing you a lot of value, so hopefully you are really interested in these videos and you're not just watching them for the sake of entering that giveaway. Anyway, this is it from me. I'm signing off and I will see you tomorrow in the next one.